Legends of Learning presents the Money Flow game. Money Flow is a game where you will learn how to manage your finances, learn how to balance a budget, create passive income, and become financially independent. You'll learn more about taxes, income, payments, and much more. Develop your personal finance skills and strategy. If you look at the game details and curriculum integration, you will see the discussion questions covered in this game is looking specifically at whether you can make different investment decisions. If you were getting paid $1,000 per week net, how much would you take home in terms of your gross? So you have net and gross being covered in this particular game. Also the differences between income and expenses, what are taxes, and what you should include in your monthly expenses. What are some of the ways that you could increase your income? After the game, students that have learnt all the principles covered in this game should be able to determine what net income and gross income is. They should also have an idea of the advantages of cash over credit. What are the pitfalls of using a check for payments? When do you have to pay property taxes? And when do you have to pay sales tax? So those are some of the topics that will be covered as discussion questions in this particular game. The concepts that will be covered will be looking specifically at tax, income tax, payroll tax, sales tax, property tax, also allowing students the ability to explain the difference between gross income and net income, as well as identifying the advantages and disadvantages of different methods of payments, including checks, credit cards, debit cards, and electronic payments. Also, we will cover the development of a system for keeping all your financial records, as well as balancing a simple budget. So let's get started. As always, Legends of Learning will provide you with a quick quiz to test your knowledge before the game begins. Different questions will pop up, and these are randomized, and you'll have to select which answer you believe is correct before submitting your answer to see if you're on the right track. So this question says, Trudy pays tax every year because she owns a condo. Which phrase best describes this tax? Well, if she owns a condo is a form of property, so she would have to pay property tax. The next question says, read each statement, which is an example of sales tax. Well, if you're looking specifically at sales tax will apply when consumers purchase products from different businesses. So if I look at all of these different options, the first one says, Susan pays tax on her home based on its value. That would be property tax because it's based on a home. B says, Deontay pays tax on a new clothing purchase. Well, if she's buying clothing, obviously that clothing is going to have a certain amount of tax which would be applicable in that scenario. So that would be sales tax. The next one, Joseph pays tax on his salary. That would be income tax. And D, Milena pays tax on her farm based on its value. So again, a farm relates to property, a home or a farm. It relates to land and buildings. So if I'm paying tax on the farm based on its value, that would be another instance of property tax. The next question is, what is a disadvantage of paying with a credit card? Well, all credit card payments are linked to a liability. So liability is when you are owing a particular institution money because you've used their money and you owe them. So you would have to pay them back. So if we're looking at a disadvantage of paying with the credit card, that would be something to consider. So the first option says accepted by most vendors. Well, that would be an advantage. B usually comes with theft protection. Well, most credit cards do have some level of, let's call it insurance that can be attached to that particular form of payment. So that could also be seen more as an advantage than a disadvantage because of that theft protection that the credit card provides you with. C, possible to spend more money than one actually has, which can lead to high fees. Well, it won't only lead to high fees, but also charges in the form of interest, because any liability will incur interest, and you would have to spend more money in the future than what you're currently spending in terms of using credit. So that looks like a definite disadvantage in terms of being required to pay more in the future than what we're actually paying today. And the last one is more convenient than paying cash. Well, obviously card payments are a lot more convenient than carrying around cash with you all the time. So that would be seen as an advantage. So disadvantage, definitely option C. The next question says, which of these is part of the process of recording expenses in a register? A register, I assume here they're referring to a cash register or a till. This would be at checkout. So when you're checking out at a local store, there would be a register. And that process of recording expenses in a register, this could also be a budget perhaps. So we just need to read the question carefully, and then we need to see what the context is in each of the different options. So it says, which of these is part of the process of recording expenses in a register? So this might be relating to some form of budget, but let's have a look at the options. A says, upload a photograph to the register of any items purchased. Well, you could do that, but that's going to be very time consuming. And if you're looking at recording expenses, you'd be trying to summarize them a bit more rather than taking photographs of everything that you buy. So not the best answer. B, rate each expense on a scale of 1 or 0 to 10. Well, that would be a personal indication in terms of your needs and wants. Some expenses that you purchase are more needs, and other expenses that you might purchase could be seen as wants. So that would be something related to the hierarchy of needs and wants. C, subtract the amount of expenses from the available balance. This looks good because we're keeping track of our expenses in this register or budget. And if we're subtracting our expenses, we're keeping track. It's a process of recording expenses. So I'm leaning towards C here. D says add the amount of expenses from the available balance. Well, you wouldn't add to the available balance because an expense would decrease the amount of money that you have in your account. So C looks like the best answer. And you can see after having completed that short little exercise before the game actually begins, you will get a better understanding of some of the topics that will be covered in the game so students can learn more. You can see that I've obviously got 4 out of 4 here in terms of the questions that were asked. So that means my knowledge is quite good in terms of the topics that will be covered in this game. So if we click onto the game, we're now going to play the game to learn more about finance. It has loaded. There's some nice music playing in the background, and now we're going to see what this game is requiring us to do. So let's click next. Our job as accountants is to study and keep track of financial information. That's very important. An accountant's role is to make sure that they're keeping the books in balance. In other words, they're balancing income and expenses. They're looking at assets and liabilities. So an accountant's job is to make sure that financial information is being kept so that decisions can be made by a financial manager. So let's click next. We can do it for our businesses, individuals, and also for ourselves. That's very important. Financial management or finance in general, or personal finance, is a very important skill that people can use in all areas of their life, whether it's for businesses, as an individual living your own life. It's something that's very practical and useful. To do that, we could use financial statements, for example, so providing us more information about the process. So the game is now taking us through some of the different categories that you'll be seeing in the actual game. So here they've shown us a monthly summary. Here you can track the cash that you currently have. So you can see that all businesses or individuals are going to have a certain amount of money that they have available. The cash available here in this example is $800. Then you'll see that there's obviously an accountant's salary. So that's the job that this guy has. They've got passive income that could potentially come from different investments. And then you've got a certain level of expenses. So if I'm looking at basic accounting here, obviously you would start with a certain amount of money. These values in green represent income amounts that are increasing the amount of cash that you have. So I would add that to what I have originally. So if I had to take a calculator, and on the calculator, if I typed in 800 and I added 3,500, that gives me $4,300. There's no passive income, so I don't have to add 0. Then I have total expenses of 2,550. So if I subtract that from my total, I then land up with an amount of 1,750, which you can see is the cash that I have available, which is the 800, plus the additional savings. Okay, so cash is what you have available, which is 800. What you're getting additional here in terms of savings is 950. If you add the two amounts together, the total comes out to 1,750, represents the total, inverted commas, net worth or wealth that this individual has in terms of what they have available. So money is earned through the various activities or jobs that people have. Obviously, living expenses and other expenses will be taken into consideration, and that gives you a certain amount of savings. So if you're looking at this individual, would you say this individual is being responsible with money? Well, if they're saving an additional $950 every single month, that's going to grow and grow and grow over time. So this cash balance will definitely increase, and this individual will grow their wealth over a period of time. Here's the starting salary, there's the passive income, and there's the expenses. And there's the amount of savings. So the game really takes you through all these principles to help you learn more about managing your finances. Here we can keep track of our passive income or total expense ratio. So obviously, the most important thing in terms of creating wealth is you want passive income. Passive income, just to explain the concept, passive means it's not active. In other words, you're not having to do physical work in order to generate that income. So for example, if we look at this guy who has an accountant's salary of $3,500, if this guy doesn't go to work, he won't receive that income. But if he has passive income through investments in property, for example, if he was a landlord and he was collecting rent, that rent would be seen as passive income. Or if he had invested in the stock market and he was receiving dividend income or interest income in the form of his investments, that will also be seen as more passive income. Why? Because you've invested in a particular asset, and that's an income generating asset that will create wealth going forward. Right, so looking at the objective of this particular game, this game is trying to teach you principles that you can apply in life in order to create more passive income to your current living expenses, and that will obviously allow you to win the game, because that would be considered financial freedom. If you can live off your passive income, you don't need to always go into your workplace to be an accountant to earn that salary, because you can rely on the passive income that you've generated. So the objective of the game says here, increase passive income to win. Right, that's the main objective. I'm sure all of you out there would love to have a certain level of passive income that can pay for all your expenses. And if you do have that, you've achieved financial freedom. That's what the game is identifying. Financial independence is what you're wanting to achieve. Alright, so the purpose of the game is to increase the passive income. We're going to obviously click roll here to see what life throws at us. The game says each yellow field is a salary field. Every time you pass one, you receive a payout. So that's nice. That would be doing work. So it's your salary day. You're going to receive a salary, and obviously there's going to be a certain amount of tax that's imposed on it. So depending on which country you're living in and working in, there's going to be a certain amount of tax that the government is going to collect from the various sources of income that you receive. So here, taxes, I agree though, taxes are cool. All right, obviously very cool for the government. Governments want to collect taxes so they can do good things with it. For example, building schools, roads, providing safety in terms of police, etc. So governments provide these public goods and services for all of its citizens. So you definitely have to pay your fair share of taxes. There are a few different kinds of taxes. The game takes you through a lot of the theory that's present. So the first one that the game is providing you with information on is payroll tax. Payroll is referring to HR or income tax. So as an employee, okay, if you are going to be working for someone, a certain amount of your income is going to be paid to the government in the form of taxes. The next form of tax is income tax. This is earned in terms of wages, business or federal or state. So income tax, a company or a business could be required to pay a certain amount of their revenue in the form of tax, and then they'll obviously calculate their profits. So different forms of tax. You've got payroll tax, income tax, all linked to the same sort of scenario in terms of employees or wages, so people that are employed in some form of capacity within the company. Then you've got sales tax. So we spoke a little bit earlier about transactions when we did the test. A sales tax is obviously any amount of revenue or money that's collected through buying and selling goods and services, and the government would collect a certain amount of tax for that. And the last one that this game is covering is property tax. So if you're an investor and you've bought property, that property is going to carry a certain amount of taxes that need to be paid to the local government for providing certain public goods and services. For example, maybe waste removal, sewerage, electricity, etc. Alright, so the game now describes what the difference is between gross and net income. Gross income is the total. So gross is before any deductions. It's the total amount of money that you receive, but we all know that things like taxes need to be taken off our gross income. So if I'm looking at the taxes and any other deductions, for example, if I'm making contributions to medical aid or towards some sort of retirement product, so for example, pension or pension funds or retirement funds, that would be seen as a deduction. And that would give us what we have left over, which is seen as the net income. So gross income before deductions, net income after deductions. Right, so now we've got a few other different blocks on the board. The green field is an opportunity field. Considering this opportunity, you can improve your financial status. So again, requiring you to make a decision. Remember, passive income is important, so you obviously want to generate as much passive income as possible, but that takes time and that takes effort. Nothing in this world gets given to you without effort or hard work, so make sure that you make the right decisions so that you can grow and develop your financial freedom. There's many ways to increase your passive income. One of them is through investments. Right, so we have a decision here. Okay, real estate is a form of investment. You may buy a rental house. It will give you more passive income. Here is an example of what you have as an offer. You have an offer to buy a new house. So now you need to make a decision. The price of this particular house is $100, and the passive income that is available is $80. So is this a good investment decision? Well, if we're focusing on passive income, any asset can generate income, and this asset will generate passive income of $80. It only requires an initial investment of $100. So would I pass on this opportunity? Definitely not. We know we have $100 available, so we can definitely purchase this. So let's buy this property. Right, so we've purchased this property. You can see our passive income is increased to $80. So we're trying to overcome life's expenses in terms of daily living. Obviously, there's no way that we can retire or live off our passive income. It's way too low. So we need to continue through life. We need to go through this game, and we need to roll the dice again. All right, here's another decision. Car upgrade. Select the car to upgrade. Consider upgrading to the least expensive one. So we've got a sedan that's going to cost us $100 per month. There's a Beetle that costs us $225 per month. A Bullet car costs $350 per month, and a Lambo is going to cost us $500 per month. So remember, this is a personal choice. Some of you might want to go with the Lambo because it makes you feel good. It's nicer driving a Lambo. But are you going to be focusing on the goal here, which is creating more passive income compared to our total expenses? Well, if I go with any of these options, obviously we need to upgrade our car. We can't be walking around everywhere. We need to have some sort of practical means of transportation, but we also don't want to increase our expenses by too much. So this is a very personal choice. You can decide on which option you believe is the best for you as the individual. And remember, every decision will have consequences. So if I choose the sedan, I'm only going to increase my total expenses by $100. If I choose the Lambo, I'm going to increase my total expenses by $500. So now I need to make a choice. Am I going to go with the smallest expense or the biggest expense or somewhere in between? Right, so a sedan is a perfectly fine mode of transportation. I'm going to be happy with that option because I want to receive passive income that's going to be greater than total expenses as soon as possible. So if my goal is to increase passive income, to make my passive income outweigh my total expenses, well, having slightly lower expenses going forward will help me to achieve the goal sooner rather than later. So I'm going to go with the sedan. You can see the total expenses have increased. There's my total cash. Okay, we know that we have more cash from the previous month. That was the 1750 that we calculated earlier. So let's roll the dice and let's see what life has to throw at us again. All right, remember when we fall on those blocks, we earn income. So we've earned more income, so that's good. You can see our cash has increased. All right, so the more work you do, the more effort you put in, the more money you're going to make. And that's a very, very important skill to realize in life, that you need to work for cash. You need to work for what you're going to be receiving in terms of your income. Let's roll the dice again and see what we have. Okay, another opportunity. Since you work as an accountant, you have a salary from a company. But that's not the only way you can make money. Definitely not. There's lots of different ways to make money. Your friends know that you are good at your job, so they ask you to advise them on their financial questions. Okay, just be careful with that. Not everyone can give advice. You do need to be regulated by the relevant authorities in terms of a professional qualification. So just be a bit skeptical when you're listening to advice from random strangers. Obviously, there's an existing relationship here because they are your friends. But even in that setting, it would be more advisable to rather seek the help of a professional when seeking advice, specific advice, because it's a very specialized field where there are going to be certain calculations that need to be taken into consideration. So if we're looking specifically at these financial questions, obviously you might have the necessary skill because you're an accountant, so we'll assume that this individual is regulated, has the necessary qualifications, and can give professional advice. So here is an offer from your friend. Your friend says they want some help. You're going to help your friend with the financial question and you're going to get rewarded with cash. Go ahead and use the opportunity to make some extra money. So again, depending on your time, it's a personal choice. If you have the time, you're obviously going to accept this. I mean, the reward is great, $300 additional US for providing your friend with some additional advice. So long as you have the time and the effort and you have the professional ability to meet your friend's requirements, I would definitely accept this opportunity. I mean, this is an opportunity to increase your financial situation, to increase your net worth. So definitely accept that opportunity. Right, so we're going to balance our budget here. Mary asks you to help her with her account. So it's Mary's budget actually. Mary wants to spend an additional amount to a house payment. She wants to keep her budget balanced. Okay, so you can see Mary has a certain amount of income. Her income, $3,000. Her expenses, the house, costs $1,000. Other expenses, we're not sure what those other expenses are, but we're going to help her balance her budget. Right, so her budget is balanced when her expenses are equal to her income. Okay, so we need to put a certain amount there in terms of our other expenses. So if we're budgeting, remember a budget means you need to balance your income and expenses. Okay, so we cannot exceed $3,000. If we do, that means we're going to have to take out loans, we're going to have to use credit. Right, so $2,000 is what we could potentially spend as our maximum in terms of balancing the budget. Because the house already cost us $1,000, I can't spend more than $2,000 on other things because then I'm going to get myself into financial difficulty because now I'm going to have to start using debt, which is a form of credit, and I need to take out loans, use the credit card, etc. And that's going to affect our net worth negatively. But we also know that we're going to be helping her with the budget, so we can earn $300 because we're helping her with balancing the budget. So we're going to do that. And we've helped her to balance the budget, and we've earned more income there. And you can see that our cash is going to continue to increase over time. Right, the red field is an occasional spending event, better to avoid them, but sometimes there's no way to escape sudden expenses. Right, we know life will happen. Sometimes the car will break down, sometimes there might be medical expenses that you have to cover. Life happens. So in this scenario, what happened? We have to fix the air conditioner in the car. Alright, so it's obviously very hot, it's in the middle of summer, and our air conditioner has broken in the vehicle, and I have to pay $1,000 to repair it. So it's part of life, it's one of those things that happen. If you didn't have enough cash available, you wouldn't be able to pay this, but you do, so luckily we're going to be able to fix the air conditioner in the car. Alright, expenses, it's better to get rid of as many as possible. Obviously you don't want too many expenses, you want to have as little as possible, just to make sure that you can grow your passive income as much as possible. But some expenses are inevitable. Certain things we cannot escape from. For example, food. We have to live, we have to eat, we have to live somewhere, our home. How would you pay for those goods? Well, there are different methods of payment, so we're going to be covering a lot of them here. The game is taking you through the different forms of payment: cash, checks, debit cards, credit cards. This is obviously cash. Cash is a very popular form of payment. Most people use that nowadays as a completely immediate form of payment. It's immediate, it's quick. The game is looking at some of the advantages and disadvantages of using cash. It's immediate, so it's straight away, and it's ideal for small expenses. Disadvantages, obviously you need to keep track of all your cash, and there's a security risk. It can be stolen. So let's go. Let's continue looking at the other forms of payments. Okay, the accountant is referring to bonus systems. So this is good. Obviously, all businesses will have some sort of rewards for good work or for meeting certain targets. So here, the game says we get a bonus. Define gross income and net income. Okay, so we know gross income is before deductions, net income is after. Total income before payroll deductions are taken out. Total income before payroll or tax deductions are taken out of gross income. Okay, we need to click this. Okay, there we go. Gross income, and we can submit that. Right, we're answering questions again, giving advice. Alright, we've landed on another one of those green squares. Here we have another opportunity. Investing in stocks can definitely create passive income. And remember, the goal of this game is to increase passive income. So the decision here should be to increase passive income. We're going to buy shares. Opportunity to buy shares of Adams Incorporated financial company. You'll receive passive income from your dividends. Right, so we need to decide how many shares are we going to want to buy. The price is $170, okay, for these 10 shares. I can obviously increase this if I want to buy more. And the passive income that it's going to produce is $20, right? So I can buy more shares. Remember, we had about $2,000 available. So I'm going to buy as many shares as possible to increase that as much as possible. All right, so let's go with just over 2,000 shares. Cost 120 shares at a specific price will total $2,040 US, and that's going to give us passive income of $240. So let's buy. Alright, so you can see we've increased our passive income. We're moving in the right direction. We still have enough cash for unforeseen expenses that could potentially materialize. So we always need to make sure that we have enough money available. Kind of like an emergency fund, perhaps. You never ever want to run out of money, so you want to keep as much of it as possible, but also not losing out on opportunities to invest in things like property and shares. So let's roll the dice again. Another opportunity. Offer from a friend. Do you want to help your friend? Do you want to help your friend? Of course we do. We have the right knowledge and skill, so we will say yes. We need to balance their budget. So we've got Michael in this scenario. Michael has a salary of $3,000. He's got house expenses and other expenses, so they want to know how much is he going to save. So 3,000 less 1,000 less 1,500 gives us 500. So I'm just looking at the mathematics, and let's earn money for having balanced his budgets. Okay, we rolled the dice again. Car upgrade. Okay, so now we need to decide. Obviously, we can't upgrade to the sedan again because we've already purchased that. So now we need to decide, are we going to go Beetle, Bullet, or Lambo? Well, looking at our scenario, we're earning a lot more income. We have a lot more passive income. So now might be a good idea to upgrade your car, depending on how much money you're happy with in terms of your monthly income and expenses. Let's go from the first level to the next level. So we're going to progress in stages. Okay, we've obviously increased our income, so now it's time to upgrade our vehicle. Let's go with this option. It's going to cost us an additional 125 Rand per month, but that's fine. Okay, we can't obviously go with that. We already have the vehicle, so we're going to continue to upgrade. We're going to improve our lives. Hopefully, we'll eventually achieve what we're hoping to achieve, which is to drive the Lambo, but also to have passive income that's greater than total expenses. So everything takes time, step by step. So let's go step by step. Let's go with the Beetle. Okay, another opportunity. More shares we can purchase. Here we're going to look at North Air Airline Company. You're going to receive passive income from the dividends. A dividend is just a share of the profit that companies pay out to their shareholders. So how many shares am I going to buy? Well, you can see here that we still have a significant amount of cash available, just over $1,400 US. So I'm going to try buy as many shares as possible. Again, let's just keep some money just in case certain bad things happen in life that we need to obviously pay for. So I'm going to go with just over $1,000 worth of shares. I'm going to buy 70 shares. The price totaling $1,050 US I'm going to buy. You can see our cash has decreased, but our passive income is increased. So let's continue to roll the dice. Okay, real estate. Very good investment, generating lots of passive income, but unfortunately, we don't have enough cash available to take advantage of this opportunity. This opportunity costs $2,000 US. It will bring in passive income of $250 US, but you can see I can't buy this particular property because I don't have enough money. So unfortunately, we have to pass. Some opportunities, even though these opportunities might be very attractive and very good, sometimes you need to raise capital or finance in order to purchase these investments. So as it stands, I don't have enough cash. I'm going to have to find some sort of financing. I don't have enough money, but I'm not going to take on debt. I'm not going to take on any loans, so I'm going to have to pass on this. Okay, here's an opportunity, starting a business. That can definitely generate a certain amount of passive income, obviously depending on what type of business it is. So let's look at this opportunity. We can start an online shop selling Christmas lights. It's only going to cost us $1,000 US, and it's going to generate passive income of $120 US. That's amazing. Right, that's if you look at numbers, that's just over 10%. So cash-wise, I've got $1,605 US. Can I invest in this business? Of course I can. I'm not going to give up this opportunity. I'm going to buy. Right, so cash has gone down again, but you can see passive income continues to increase. Okay, real estate again. Unfortunately, we don't have enough money. We have to pass. Okay, here's an opportunity to make more money. We're going to help our friend again with financial questions because we're an accountant and we're professional and we have the necessary skill and expertise. So we're going to accept and we're going to help them with their budget. Let's balance the budget. So in this scenario, we've got salary $2,400. You can see they have lots of expenses here. Okay, so we're going to have to grab a calculator to do this calculation just to make sure that we are accurate. 2,400 is our income. We're going to subtract the house of 1,000. We're going to subtract the 700, and we're going to subtract 400, and that gives us 300. So 300 is remaining. So that balances budget. Okay. Ooh, another opportunity to upgrade our car. Wow. All right. So again, we can't choose those previous amounts in terms of what we've already upgraded. So let's go with the next option. Okay, because we're increasing our income. Okay, we've increased our passive income. Now it's time to upgrade. Let's go with the next option step by step. Let's go with the Bullet car upgrade. Let's start a business. We're going to start selling t-shirts online. The cash, 955. Can we invest in this particular business? Yes, it's going to cost us 500. It's going to provide us with passive income of 70. I definitely want to buy this business. Let's continue. Right, real estate. Wow. This is a nice property. It's going to earn a lot of passive income, but unfortunately, I just don't have enough cash available. So I can't. I'm going to have to pass. Ooh, we had a toothache. Unfortunately, we had to go to the dentist. So sometimes medical problems do occur and I have to go to the dentist and I have to pay the $500. I do have enough money, so that's good. Let's pay. We do have another expense. Here's another form of payment. We're looking at checks. Obviously, a check can be written out. A check is a very old form of payment, but it can still be used in today's world. But nowadays, everything is digital, so most payments are done with other methods of paying. These are just some of the advantages and disadvantages of using a check rather than using cash. And these are some of the disadvantages. So we've got advantages on the left and disadvantages on the right. Let's move on. Looks like we landed on another red space. So now we have car engine issues. Wow, we've landed up with some really bad luck, unfortunately. Life happens. We're going to have to fix the car. We're going to have to pay $1,000 and that's going to obviously take a knock on our cash. But we have to have a car. Alright, here's another form of payment, debit card. That's an electronic form of payment. You've probably all seen these cards, these plastic cards. It allows us to make payments without having to carry cash. These are some of the advantages and the disadvantages of using debit cards. They're a safer form of payment because we don't have to carry on cash. It's normally secured with a PIN number, so a much easier way of making payments. Just some of the disadvantages though, obviously it's quite difficult to keep track of spending because you're not using physical cash. And obviously some institutions will charge additional fees for providing you with the service. Right, here's a bonus. What type of tax is this? I am checking out at the grocery store my purchases total, that amount including tax. What tax is this? Well, if it's a grocery store, it's definitely a sales tax. Right, let's see if we can buy this business. Wow, this business is very expensive. It's going to cost us $7,000, but it's going to provide us with a lot of passive income, but we just don't have enough money to afford to buy it, so we have to pass. Okay, here's another business. This one we can afford. It's going to cost us $1,000 and it's going to provide us with passive income. Let's buy. Okay, we've landed on the same square again. It's the last car upgrade. So we've increased our standard of living. We've reached the final step. We're going to now go with the Lambo, but it's going to cost us an additional $150 per month. Okay, we've landed on another red square. We have spending, unfortunately. We need to buy a new pair of sneakers. Maybe our old pair was damaged or it's too old to wear, so we have to purchase a new pair of shoes. We do have enough money, so that's fine. We can purchase it. Sometimes you can purchase things using other forms of payment, like a credit card. So the game is taking you through what a credit card is. Just be careful though, because with a credit card, you're using the bank's money. You're not using your own. You're borrowing money. That's very true. Alright, let's see what we have here. Obviously we need to borrow money and then we pay off that later, and that's going to incur interest. Interest is an additional payment that you need to make to the bank because you're using the bank's money. So those are some of the advantages and disadvantages of using credit cards. Remember, credit cards cover, carry an additional amount of cost in terms of interest rates and fees. Okay, can we start this business? Unfortunately not. We don't have enough money available, so we're going to have to pass. Okay, we've bought a new pair of sneakers. Another opportunity to buy shares. Unfortunately, we only have enough money to buy 10 shares, so I'm going to only buy 10. Okay, we have to get a new watch. We have to pay 160. Alright, you can see here that our cash is too little. So are we going to be able to pay? We can, but the problem is we need to pay with our credit card. We don't have enough cash to buy that or pay for that expense using cash. So this is where credit comes into the scenario. So we're going to have to take out some sort of liability, and that's going to cost us monthly expenses of $24. So be careful when you're paying with a credit card. It's going to increase your monthly expenses because you have to pay off the interest and fees. Okay, we start this business. No, we don't have enough money. We have to pass. Right, here we're going to get a bonus. You make $14 an hour. This week you worked 12 hours. You made $168, but you only get to keep $141 because of tax. What tax is this? Well, this is work related, so this would be seen as income tax. Not income tax, I see it's red, so this will be payroll tax. So payroll relating to the amount of money paid. Looking at this from the business perspective. Okay, so the tax that the business pays. Right, spending, again we have to fix the air conditioner. Okay, we've already upgraded to the most luxury car, so we don't have to worry. We've got the best of the best. We're driving the Lambo, so we don't need to upgrade any further. Okay, we've received more money. We're going on vacation. Great. Your job is to find the cheapest option so you have the most spending money possible. Okay, so sometimes if you want to go on vacation, you need to make a decision. Right, the flights. Okay, we're going to go to Rome. Right, if we're going to Rome, it doesn't matter how we get there, as long as we don't mind sitting in a particular class of seat in terms of economy or first class or business class. Here we have two options. We've got the best airlines, return flights $640, and we've got Cosmic Airlines, return flight $600 US. So assuming that both flights are identical, both flights are offering the same benefits in terms of meals, entertainment, etc., and it doesn't matter which airline we go with, we're obviously going to want to go with the cheapest option to save ourselves some money so we can still go on holiday but without having to pay more money than we need to. So definitely the best option would be the Cosmic Airlines. Okay, in terms of food, during your 3-night stay, you'll eat 3 times a day. Choose the cheapest option. Eating in restaurants, eating hotel food, $25 per day for 3 meals or $5 per meal. Which is better? Maybe eat when we're hungry rather than paying for meals that we might not even make use of. Okay, so you can see that we have those different costs. Okay, we're going to get a bonus. Define gross income and net income. Income left after taxes would be our net income. Okay, more real estate. Unfortunately, we have to pass. We don't have enough cash. More expenses to pay for. More expenses to pay for. Offer to help your friend. Definitely will help them. Alright, so Ryan wants some help on taxes. Ryan's salary has a net income of $1,000 per week. He pays $2,000 income tax and $55 in payroll tax. Ryan wants to help him determine his gross income. So gross income is before. So if the net is that, we'll have to add up all of these. So this plus that gives us this. So 1,255 net income plus gross income equals gross income. So yeah, all of them added together, yes. Okay, can we invest in this real estate? Do we have enough money? Yes, we do. We can buy it. More expenses, unfortunately. Okay, offer to help a friend, definitely will help them. Okay, so we've got salary here, we've got expenses, so we need to balance the budget. So 1 plus 5 plus 5 is 2 plus 2 is 4, so $4,000 balance the budget. We're going to get a bonus. I ate at a restaurant and my meal totaled 3.35 plus tax. What type of tax is this? This would be a sales tax. Okay, we want to start a business. We can definitely invest. We definitely have enough money. Another business, unfortunately, 4,000 is just a little bit outside our cash amount, so we have to pass. More expenses to pay. You're about to buy yourself a new TV. Decide how you'd like to pay for it. Right, so do we want to pay 1,000 once off, or do you want to add $100 in terms of our expenses? It's probably better just to fix the TV as is rather than paying it off over time. It might be more costly to do so. So let's just pay it off. Right, can we buy this real estate? We do have enough money. Yes, we do. Are we going to help the friend? Definitely. Let's balance the budget. So here we're going to have to add. So 1 plus that's 1.7. It's 2.5. That's 4.5. So we need to make this 4.5. So we need to add. Okay, can we start this business? Yes, we can. Alright, we've got 100 acres of land. Every year they have to pay what taxes? Obviously property tax. Property tax is paid on land. You've got a raise. That's amazing. Okay, so you've done a really good job at work. You're going to get a raise. Your raise an increase of 100. Right, can we buy more shares? Definitely. We have enough money. Let's see what's the maximum amount of shares we can buy. We've got $3,420. I can buy shares. Let's keep some money just in case. So if I spend that, I'll still have just over 1,000. So I'm going to buy. Right, so I have just over 1,000 just in case something bad happens. Right, let's do work for our friend. Okay, let's balance the budget. So there's 2,800 here. So 1,000 plus, that's 1.3, 1.3, 1.8. That's 2.3. So that'll be 500 to balance the budgets. Right, let's do more work, earn more money. Alright, so if we add up the salary, we've got 3.1 plus 2, that's 5.1. So 5.1 on this side. Okay, then we've got 1 plus 1 is 2, 2.3, plus another 1, which will be 3.3. 3.3, so to get 2.1, there we go, balance the budget. Alright, earning more income. Another budget to balance. Okay, so this one's a big number. 4 plus 3 is 7, 7.5. That's 9.2. Okay, 9.2 on this side. 2 plus 2 plus 2 is 6. This will be 7, 8, 9. This is 1, 3. So 1, 3. That's a lot more. So here we had... Yeah, this one you might actually need to use your calculator because the numbers are so big. Let's use the calculator. 4 plus 3.5 plus 2.2 gives us 9.7. Then let's subtract all the expenses. 2 minus 0.8 minus 3.5 minus 2 minus 2 gives us negative 600. So there we go. Okay, here's that expensive real estate. It's finally come up. Now we have enough money. We've got cash of 5,986. We can definitely invest the 4,000. That's definitely going to increase our passive income by a lot. But you can see it takes time. Passive income sitting on 2,070. Total expenses 3,274. So we're almost there. We still need to continue increasing our passive income. Right, define gross and net income. Net income and the deductions will be the gross income, because gross income is before. Right, can we buy more shares? Definitely, we've got lots of cash available. Let's try to buy as many of them as we possibly can, but still keep some money available just in case. I'm going to go with that just over. There we go. That'll be just under 1,000 remaining. Let's buy that. Okay, so we've got 992 cash available, but we've increased our passive income. Okay, we've got real estate. Unfortunately, we can't invest. We have to pass. More real estate. We have to pass, unfortunately. Okay, more chances to buy more shares. The price. Do we have lots of money available? Yes, we do. So we can definitely purchase as many of these shares as we possibly can. Let's also keep some money available. So let's just go with that. It's just under 1,000 available. Let's buy. Okay, so we've got 948, but you can see our passive income has increased. Okay, can we start this business? We don't have enough cash. We need to pass. Okay, the boss has given us another raise. We're doing a good job. Our salary has increased. Okay, so we need to answer this question. Every year in April, I have to send off my taxes to the government. What type of tax is this? Sales, payroll, property income, income tax. Okay, can we buy this house? Definitely. Okay, we've upgraded our car to the most luxurious, so we don't have to upgrade our car any further. More expenses. Let's pay once off. Can we buy this business? 7,000, but too pricey for us. We don't have enough cash. We need to pass. Can we buy this business? Yes, we can. Can we invest in this real estate? Yes, we can. That's amazing. Alright, and with that final investment, we've completed the game. Congratulations. Your passive income is greater than your total monthly expenses. This means you've achieved financial independence and you've won the game.